What is up guys, Taiki here, and in this video I want to discuss my path to becoming a humble yield farmer and the mistakes I've made along the way. So if you like the content, please like and subscribe, leave a comment in the comment section below. None of this is financial advice. Okay, so I have this brand, this image of becoming this humble yield farmer, but it definitely did not start out that way. Like over a year ago was like a DeFi noob, a crypto noob. I was like definitely buying tokens that I should not have bought. And, I was like, buying high, selling low, etc. And at the end of the day, I feel like everyone starts out like that, and those who learn from their mistakes and stays in the market are those that make money. Most don't and lose, right? Like most people just like get in on the hype cycle, price goes down, they sell, they never learn like how to actually make money in the markets. And I argue that like most paths in crypto lead to yield farming because on a risk adjusted return perspective, farming just offers like much better like returns than just like buying and holding. I mean, of course, like, you can like buy and hold and make money and whatnot, but if you can buy and hold, earn yield farm, etc., like on the side, generate yield, double-digit yield on your assets, then like even if there's a market correction, who cares, right? And it also helps you manage risk because if you can earn like 20 to 30% yield on stable coins, like you don't really have to be 100% long crypto all the time. You can always hold like, let's say 10 to 20% stable coins, earn yield, and deploy those stable coins at like the most opportune times, like whether like right now in the most recent market correction, or it'll help you enter new opportunities, like because you don't have to sell your existing positions to enter new ones. And Albert Einstein has this crazy good quote on defining insanity, right? As a person, a person that's insane is someone that does the same thing over and over again and expecting different results. And this kind of ties into the idea of you have to learn from your mistakes, right? Because we often hear about that guy, right? This hypothetical guy that everyone talks about, like that guy that makes a bunch of money in the bull market but doesn't keep it, right? Maybe it's synonymous like people that's like diamond handsing like dog coins, right? But we always hear about this guy, like that guy, he makes a lot of money, but he just like diamond hands it all the way down, right? And there's often this sentiment, right? Just everywhere, right? And like, I mean, at the end of the day, like people are like egotistical and like they think they're smarter. So there's always this idea that like, hey, like we all know that guy, but I'm not gonna be that guy because I'm smart. But like, how the hell do you know, right? Like no one actually expected Bitcoin to top at 64K. No one expected ETH to, just go to like 4.2K and then crash down to like 1800, right? In April, people were like throwing out like these ridiculous price targets, super cycle and whatnot. And though like those arguments might be true, there's no way to know, right? That's kind of the idea, right? The humble farmer mindset. Like you shouldn't assume that something's gonna happen. You should just, study the markets, do the research, and react to the markets to the best of your abilities and manage risk. And there's this great quote by Hisaka. He's one of the Twitter traders that I respect the most. And he says, no, there is no bear market. There is no bull market. There's only a market, the market, right? And this is a good way to approach the markets, right? You shouldn't blame your losses or gains on bull markets, bear markets. You should just try to navigate the markets as best as possible, and the gains will come, right? If you're just making plus CV decisions over and over again, mathematically, you're gonna make money. And the moment that you claim you're better in the market is the moment you lose, right? You should always be humble, never assume that you know better, take profits and manage risk. Because if we believe that, we're in this macro super cycle in crypto where like, crypto is gonna be much larger than it is now, like 5-10 years ago, as long as you're not getting like rugged, liquidated, or taking on too much risk, like we're all gonna be fine, right? Like I feel like crypto volatility and prices is so high every single day that we kind of get caught up in like the daily price fluctuation of the markets. But if you take a step back and you just kind of enjoy the markets, earn yield on them, it just helps you navigate the markets a lot better. So to transition back to this original topic, I kind of want to discuss the mistakes that I made in the past, right? And it's kind of documented in like my YouTube channel, so I thought it was funny to like go down memory lane and discuss the mistakes that I made and how I've learned from the mistakes, and how that's helped me make money in the markets in the past, let's say 12 months. So 3 main ideas. So the first mistake, buying farm tokens, operating on the Ethereum mainnet. Second, being a decentralization maxi, right? And then third, being early on Avalanche but missing out on Joe. So let's tackle this one by one. So buying farm tokens and operating on Ethereum. So back, I believe roughly 8 months ago, I made this video on Badger DAO. And don't get me wrong, Badger is a good project, right? I like the founder, Chris, right? Spadaboom, right? Great guy. And I really like their mission of bringing DeFi to Bitcoin, or bringing Bitcoin to DeFi. And they actually offer pretty decent yields on Bitcoin. But, you know, like when I made this video on like the fundamental analysis of Badger DAO, I really didn't really know what I was doing, right? If you click on this video, you see that I was doing, or at the time I thought I was being super smart by taking like the total value locked, dividing it by the fully diluted valuation of these coins, and be like, oh my god, like Badger DAO, you know, it's pretty good, right? I mean, like maybe the valuations need to go much higher. But obviously in hindsight, like TVL doesn't really matter, right? Obviously, you know, a protocol with $1 billion in TVL is much more valuable than a protocol with $10 in TVL. But if you're investing in a token, or if you're farming a token, you kind of have to care about like, okay, what is the value accrual to the token, right? You can't just have high TVL and have the token go up. Sure, it might happen, right? And that could be a narrative, but you know, that's not a good way to invest, right? Because if you see these people saying like, oh, this thing has high TVL, so you buy, right? Like that is not how you make money in the markets. You could, right? But I don't think it's like the best way to think about your investments. And you can argue that the mistakes I've made in the past is like combining a buzz cut with this, you know, fluffy jacket, gray jacket, but you know, that's besides the point. And you know, Badger DAO, like, I mean, I actually made money on this trade, like, cause I mean, I was like a total pleb, right? I was like, February, I bought this cause like, oh my God, like I love Bitcoin, I love DeFi, let's go, right? And I sold like roughly here. So I actually turned out, I actually made money on this trade. But I learned that, like, you know, at the end of it, like, if you actually tracked what happened, right? Badger at the beginning of its, I guess, early life cycle, it's a good project now. But you know, it was a farm token, right? There was like actually like it was a governance token. There was like not that much value accrual. Now they're like on a totally different path, and you know, you can argue that, you know, there's actually value accrual. But you know, buying farm tokens, governance tokens, not the highest EV approach to the markets, right? Just thinking about supply and demand. You know, these whales are like farming this for free, like with Bitcoin, with no impermanent loss, and I'm just like buying this, like what do you think they're gonna do, right? I mean, the Badger token emissions are part of the yield, so of course they're gonna be selling it, right? Like via auto compounders or etc. And you know, I was like, wait, like these whales, these farmers are making so much money, right? Like I'm literally buying I'm literally their yield. And like, why am I spending $50 transactions to stake and claim my tiny position, right? I was like paying like 1% of my entire stack, like approving the smart contract, $1 to deposit, $1 to unstake, $50 to unstake, $50 to claim, and then $50 to approve on Uniswap, $50 to swap. And I'm like, wow, like what am I doing? Like, why am I even operating on Ethereum? And from that day, right, I was like, you know what? I'm gonna learn how to become a farmer, right? Because farmers, it seems like they're making a lot of money. And you know, that's kind of how I transitioned to becoming a farmer. And then, you know, the second mistake that I made was becoming a total decentralization maxi. And it kind of ties into, I guess, the growth of my channel. And you know, one of the biggest mistakes that I made in Q1 of this year was missing out on Binance Smart Chain. Because when this thing popped up, I was like, hey, like, you know, bro, like that's super centralized, right? I'm not gonna support a centralized chain, like ETH for life, you know, like, and you know, all my friends they were going into Binance Smart Chain, they made a bunch of money, and I'm like, oh my God, like, and yeah, and I said that like right there, right? And I'm like, this is the price of BNB on a log scale, and I'm like, oh my God, like, what am I doing? Like, why, like why am I such an ETH maxi, right? Like this is not how you make money, right? Like, would you rather be right or would you rather make money? And then, you know, what I learned from missing out on Binance Smart Chain and essentially the entirety of the move was that, like, wait, people just want to use DeFi, right? Like people, like if they think it's safe, if they think that chain is safe, and if they think it's, you know, plus EV on a macro level, people are just going to deploy capital, right? I'm like, wow, cool. Okay, like then at that point I pledged to not be a decentralization maxi and farm on the next scalable centralized chain, right? Like, you know what? Like, I am not gonna miss BSC again. I see the trend. I see where the market is going. I'm listening to the markets. I'm gonna ape into the next super centralized chain, and that was Matic, right? Obviously, Polygon, their ethos ties in with Ethereum, so I guess it's kind of different from Binance Smart Chain. But you know, Polygon, also a very centralized chain, very scalable, low transaction fees and whatnot. And that's kind of how my channel grew in the past, let's say 6 months, right? And my most viewed videos back then were like, you know, these, like how I plan to farm Matic, right? And how I farmed Matic, right? And I was like going super off the risk curve, but you know, I was still like farming like insane amounts of Matic, and I just like I guess made a name for myself back then. And it's kind of crazy because my viewership, right, even though my subscriber count has like 5x since May, is like lower now than it is back then, right? So, you know, that's one of the reasons why I don't believe that we're near the end of the cycle, just because I feel like, you know, back in May, like everyone just like was like just trying to, you know, just throw money into crypto, but now it's like there's less excitement in the air. And the moment that, you know, my YouTube metrics start to V-shaped recovery, like all the way to the moon, then maybe that's when I start taking risk off. And then the last mistake that I made that I wanted to highlight is being early on AVAX, but missing out on Joe, right? And this is one of those instances where I made money, but I could have made a lot more money, and I was right on my thesis, but I allocated incorrectly, right? And that's kind of one of the max pain scenarios. So, if you go back to my Avalanche videos, I was actually super early onto Avalanche. I said on August 10th, I'm like, okay, like humble farmer thesis, you go where the money markets are. They're launching on the 19th of August. Like, let's front run this liquidity. Let's buy the AVAX token. And I did pretty well for myself. And I'm sure most of you, like caught the majority of the trend. And, like it just like literally went up, right? It's a pretty strong market. But, one of the mistakes that I made when allocating into the Avalanche ecosystem was that I bought Pangolin, right? Freaking Pangolin. I bought this thing, right? Sure, it's cute, right? And it's like, I want to pet it. But like the PNG token was awful, right? Like I bought this instead of Mr. Trader Joe, right? And if I bought Trader Joe at the time where I entered, which around August 10th, it was like 2 cents, right? It was a potential 100 to like 150x. But, I just wasn't open-minded enough. I didn't do the research. And, I was right in the macro thesis of, okay, Avalanche is the next rotation, but, I didn't allocate, I allocated incorrectly, if that makes sense. So sorry, crypto fish, right? You tried to get me to buy Joe, but, I was too close-minded, right? No offense to Pangolin, of course. And then I realized that, like, hey, like, it's not, I shouldn't just be upset that I missed out. Like, what are the lessons to be learned, right? And I realized, wait, people don't like standard Uni v2 clones, right? I mean, sure, they work, they're functional, but people want to use something that's new, something that's exciting. And the next time, I'm looking into rotations and whatnot, I'm going to bet big on a novel decentralized exchange on a new ecosystem. And that was DeFi Kingdoms, right? DeFi Kingdoms, probably like one of the best farms that I've ever been a part of. I don't even know what's going on. I don't even know if the valuations make sense. But I mean, people are farming this for 4-digit APYs, and the token is up only, right? And I don't do price targets on my channel, so like I fully expect the price to correct, right? I mean, you should expect people to take profits, right? I mean, this is a farm token. Yes, it has utility. Yes, I totally understand all the bull arguments for DeFi Kingdoms. In fact, this is my highest conviction farm. But just be careful, right? It's a farm token. And yes, I'm bullish. I guess touching on it too. It's one of those examples of like, I missed out on Joe. I'm probably gonna like get made fun of for the rest of my life, right? As long as I have a YouTube channel. But at least I can rest comfortably saying that, hey, like, I learned from that mistake, and because of that, I allocated correctly. And one of the lessons was, okay, like DeFi Kingdoms is like the next Trader Joe, at least in my head, like a couple months ago. In summary, crypto is hard, and it's a really emotional game, right? I feel like when it comes to approaching the markets, it's not really, I don't really approach it as like me versus the markets. It's more like me versus me, right? Because it's with the markets, you're managing your own money, right? And when it comes to money, and you like, depending on like how big of size that you're putting it in, putting into the markets, it kind of becomes emotional, right? Like once you buy a token, you're psychologically attached to that token. It's really hard to sell on the way up. It's really hard to hold on the way down. It's really hard to buy dips. It's really hard to sell rips. But if you take a step back and try to have this humble approach of let's just take profits along the way. There's nothing wrong with taking profits. Who cares if you don't sell the top? Like no one really cares at the end of the day. And instead of being angry, like learn from your mistakes. Ask yourself, like, what could I have done better? So these mistakes, obviously it hurt me, right? At the time, like buying farm tokens, operating on Ethereum, I felt super dumb. But I was like, what? Let's learn from it and let's adjust, like, I guess, my strategy for the market. Being a decentralization maxi, I missed out on BNB. I thought like that was like this was the moment, this was life-changing money moment that I was waiting for all along, and I missed it, and I like really was beating up myself. But hey, we had Polygon, we had all these other ecosystem rotations, and I'm sure that will continue, right? Because there's this narrative of like, okay, like how do we value these L1s? Maybe Avalanche, Luna, Phantom, Solana, they're undervalued relative to L1, and who I don't know, right? But if we're farming and if we're identifying great opportunities, then it could be a way to make just like sustainable gains. And early on Avalanche missing out on Joe, just like it's really painful to have to do so much research and to be right on an idea, but to like just like to be allocated like completely incorrectly, right? So in the future, right, like not only am I going to focus on the research, but I'm also going to focus on, okay, how am I going to allocate to this ecosystem? How am I going to size to this ecosystem, to this like play or this narrative? And that way, I can try to be the best version of myself that I can be. So that is the, oh yeah, so also one thing I want to add on is like this greedy mentality, right? And I feel like I kind of got caught up in this mentality back in May as well. It's just like, like people say like, oh, like, yeah, like I should take profits, but I'm just gonna wait for like 1 more 2x, right? 1 more 2x, and then I'll start farming stables. But this also goes back to my original point of like we don't know, we don't know what's gonna happen with the markets. And I often like see like this idea of like, you're like, bro, like you said that last month and got wrecked, right? And also lastly, this I feel like people just want to sell things for a 10x, right? Because psychologically it feels good, but the 10x, like it really isn't that important, right? Like if you turn $10 into $70, right? That's a 7x. You sell, you rotate into Ethereum, right? A safer bet, and you earn 50% of that. You turn $70 to $105. Well, that's technically a 100x, or sorry, a 10x, right? Sure, it's you don't get to like cloud post on Twitter saying, oh, I 10x'd on this coin. But like at the end of the day, no one cares, right? Maybe you gain a few followers and likes and makes you feel better about yourself. But clout chasing, it's prevalent. I mean, everyone does it, right? I mean, it's kind of human nature. But 110x and like I feel like my mentality is like this idea of compounding, right? It's like I can get a 3x in this coin and then a 3x in that coin, and 3 times 3 is 9, so it's essentially the same as a 9x, and I'm taking a much lower risk. Easier said than done, right? I definitely don't get 3x's all the time, but it's always, the markets are always this psychological battle, and there's nothing wrong with taking profits early. There's like you don't really gain anything by having a 10x, right? Because I feel like people wait until a 10x to sell, right? Even if they're at like at 8x. But like who cares, right? 8x, 10x, they're all the same at the end of the day. So yeah, be humble, manage risk, have realistic expectations. Nothing wrong with holding stable coins. If we're in this raging bull market, like does it really matter if you're does it really matter if you're 100% long crypto or like 90% long crypto, 10% in stable coins, when you can earn 20 to 30% in stable coins easy? No, I don't really think so, and I feel like it'll help you sleep better at night. And that's the humble farmer way. Try to be humble. Sometimes, yes, there's time to be DJ, right? There's time to sometimes take on leverage, but not financial advice. But just have this humble farmer mentality, and I feel like we're all gonna make it. So thank you guys for watching, and have fun farming out there.